BlackRock actually announced some layoffs as well. And what we'll see is as we get into earnings season, and this week we'll have more banks than the tech companies come the week after, is they seem to announce a lot of these layoffs at their conference calls. So I'm curious in the next 2 to 3 weeks what we hear. Seems like it's starting to uptick a little bit. And again, we'll have to watch the 10-year this week as well. I think that'll be interesting. In crypto markets with searches on Google and even with the recession, right? When the Fed first started raising rates, the top search for recession, I mean, it was just massive. Everyone was like, oh, well, now we're going right into a recession. And here we are, multiple years later, and we haven't hit that recession yet. And searches now have kind of gone the opposite way, where now if you look up like the amount of searches for soft landing, no landing, like all of these things, they're at the highs. But it's just interesting to take note of that.
In the next few weeks, Raj checking out how BlackRock and other companies are doing. We're digging deep into the details. Banks are in the spotlight, sharing their plans, and giving us a heads up on what's coming next. With Gareth, we're also keeping an eye on the 10-year market. It's a big deal and tells us a lot about what's happening in the financial world. Why does this matter? It's like the heartbeat of financial change. Now, no more waiting. Let's keep talking with Gareth Soloway.
Ethereum kind of perked up right as soon as, in fact, basically when the ETF, actually when that fake rumor hit, that was the first kind of uptick in Ethereum that we saw. And then the next day, it kind of continued its rally all the way up to about 27,000. I can bring up my chart here, and you can see that we did hit this upper band on Ethereum, right? So again, if you look back and look and say, okay, well, where's the confluence of levels? There was a level here at around 2,700. And then also look at the parallel lines that we were stuck in. We had pierced it once over here. And if you do a parallel, it gives you the exact high right there. So just kind of cool stuff like that. Before we jump into some of these other altcoins, I would love to just show one thing that's caught my eye on Bitcoin. So I think the first thing is, if we're only trading, even like you said, a 10% correction, we're only back to where we were about, 10, 12 days ago. So it's not like, yes, it was a 10% correction, but it's not like, oh my gosh, Bitcoin's crashing. It's not crashing at this point. The one thing I am watching, though, is this little upsloping trend line in purple right here, kind of connecting through this low and this low and this low and this low. We pierced it on that reversal day. We're now beginning to kind of trade a little bit at or below that line. And I do think that, at least according to what I'm seeing, is if we do see a breakdown here, you probably do head to 38,000, which again is not that much further down, right? I mean, it's about $4,000 down, a little less than another 10% move from here. The reason why is not only is the level here, if you look pivot high, pivot high, pivot high. So we kind of were batting against this level, it's 38,000 level, and then we broke out. So support, or in this case, this was resistance. Once it's broken, it becomes support. And then one other little tidbit I like to show here is if we throw the 100-day moving average in there, that's also that level as well. So in terms of would I think that Bitcoin could gain support if it hits 38,000? Yes, and I even think it could bounce off of that level. The only potential bigger negative I see is the fact that yesterday we closed the weekly with a topping tail. Topping tails are reversal signals. So we have a weekly topping tail now on Bitcoin. And again, if you look at Bitcoin or any asset class, topping tails often can mark a longer term high, like not just a 1 or 2 week high, but it could be a multi-month high in Bitcoin. And then in fact, the monthly as well, we obviously still have a lot of time left this month, but currently it would also be a topping tail as well. So little things like that, it doesn't give us any 100%, right? It's all probabilities, but it's just things that as a technician, I pay attention to on the charts of Bitcoin. I think right now the markets are still pricing in a March cut. I think at the end of March is what the first cut is being priced in at. And I guess what I'm struggling with is, okay, we see a labor market that at least on the headline is still very, very strong. But the question is then, is the underlying, we've heard a lot about, people getting multiple part-time jobs, which makes maybe the labor market seem better than it really is. But what does it tell you about an individual who has to get multiple part-time jobs to be able to afford, rent or whatever it may be? But yeah, I mean, I guess that's the one caveat here where, we saw CPI data a little bit hotter last week. PPI data came in a little bit less than expectations, so that kind of mitigated that. But really, as of now, the labor market seems on the front line to be strong. Does that eventually crack? And you got to think at some point it does. I mean, we've been, I thought honestly by the end of last year we would have been in a recession, and so far no sign of an actual recession, at least according to the numbers. I happen to think that a lot of us out there would agree that, there are many people in this country that are probably feeling like it's a recession already.
Now let's talk about Ethereum's journey. Gareth is helping us understand the ups and downs in its charts. Think of it like solving a financial puzzle, and Gareth is really good at it. But there's more excitement. Bitcoin is like a roller coaster, and Gareth is the expert rider, telling us about the twists and turns. Will Bitcoin find a stable place at $38,000? The charts tell a story beyond just numbers. It's about how people feel about the market and the possibilities that keep us hooked. Gareth Soloway takes us on a journey where he combines technical know-how with market psychology, giving us insights that make sense in every market move. Gareth also talks about the current economic situation and shares his thoughts on the job market. Let's hear from him.
Going into the rest of this week, we're obviously getting into earnings season. And that's speaking of labor market, I think it's worth mentioning that last week Citigroup reported earnings, and then they announced that they were going to lay off 20,000 people over the next couple of years, which actually is 10% of their workforce. So it is a significant announcement. Yes, it's only 10%, but still 10% is significant for a company. My question with that, and this is just another thing I was thinking about, is are they going to lay off 20,000 because the economy's weakening, or is it because they're finding that AI is beginning to displace some of the jobs that people do, and they're anticipating over the next 2 years or so these layoffs that are going to occur? Yeah, AI will replace it. And that's kind of one of my bigger fears for the labor market, is that once we do get to a point where the economy slows down, it has a double whammy of this AI kind of taking over jobs in addition to a weak economy. And that can really perpetuate a long recession versus just a limited recession. When spreadsheets were invented, right, did that tend to replace low-paying jobs, and did it increase the disparity between high income and low income, right? And we've seen that disparity of the middle class shrinking, the poor groups, increasing, and then the wealthy. Like I just read over the weekend that, the billionaires basically doubled their wealth since COVID, while everyone else has basically been suffering. And I guess that would be, and I know it's not really chart related, but it's just an interesting little thought process of, does this increase that disparity between poor and rich? It's one of those things where I think that there's a big fall on the horizon at some point, but the timing of these big falls is unbelievably hard because there can be delays, right? I mean, you get the Fed to mention that they're a little bit more dovish. It can delay something, vice versa, if they're more hawkish and different things like this. But I do think that looking at the charts, the S&P's into resistance here. But one of the things that I've learned in decades of trading is that the markets love even numbers, right? So whether it's 5,000 on the S&P, and you could see that if you go back to 2021, we got to 4,800 and change, but we never touched 5,000. And so there is a chance, I think ultimately there's a big drawdown in the stock market at some point, probably associated with, and we've talked about this on this show many times, that when the Fed actually cuts rates is actually when the markets usually decline. So I still think that will happen, but the question then is, do we touch 5,000 or pierce 5,000 to at least claim that thing? And one of the reasons, it's very psychological. Even numbers go into human psychology of, when you hit an even number, you get the media to react. The CNBCs of the world grab their pom-poms and do the cheerleading, and you see it on every, Market Watch and Bloomberg. And it basically creates the last push of bullishness to get everyone that wasn't long to be on the long side, and it stops out the last of the shorts, if you will, because they're like, oh my gosh, it broke 5,000, it's a huge breakout, and the bullishness is just kind of crazy. But then that's usually the last gasp, of market power. And so I don't know if it will pierce 5,000, but I'm leaning towards it maybe touching that. Granted, it's only about 4% away at this point, but it wouldn't shock me if we do touch that. But then I do still think, I'm still in the camp that, if you look historically at Fed cutting cycles, that's where that downside comes in. And I still think, again, inversion of the yield curve, right, when it uninverts, and we haven't uninverted yet. So, I mean, it does lend us to think that maybe there's that little bit of upside left before maybe we uninvert.
Gareth Soloway is about to break down the current economic situation. Earnings season is not just about boring numbers. Gareth helps us understand it by turning financial talk into a story we can follow. Citigroup is making headlines with big job cuts. Gareth takes us on a thinking trip, wondering if this move shows economic problems or a big change powered by technology. The job market becomes like a painting, and Gareth shows us possible futures that mix with the dance of tech and money. As we navigate through this financial maze, Gareth talks about economic differences, asking why the rich are getting richer. But there's more. He shows us charts about the S&P's resistance levels and why hitting big numbers is a big deal. Are we getting close to 5,000? And what comes next? If you've been with us so far, big thank you. Don't forget to subscribe to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stay with us for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.